Welcome to the Rose Show podcast.
Welcome, everyone, to Winning Mindset in a Bear Market, Options Trading, Macro, and TAO with Simon Ree. Thank you for joining us this evening or morning. We hope to make this space educational and lots of fun. Quick disclaimer, please do not construe this as investment or financial advice. I'm Rosanna, your host. I'm an options trader and investor. Been an entrepreneur and investor for over 25 years, focused in equities, real estate, and businesses. I'm currently a CFO of an international manufacturing e-commerce business and also a CIO of an investment holding company. I also practice daily Qigong, Zazen meditation, and try my best to keep a positive mindset and live a Zen life. And beyond all this, I have an insatiable desire to keep learning and growing. I believe we can always improve and be better in business, investing, and in life. And this is why we're all here tonight. In our space tonight, we'll be speaking with the amazing modern day Renaissance man. And I call you that because you are. Simon Ree, author of #1 Amazon bestseller, The TAO of Trading, How to Build Abundant Wealth in Any Market Condition. Simon so eloquently combines Western and Eastern philosophies to empower people with a positive trading mindset so they can maximize their profits while minimizing their risks. Now that sounds essential to me, especially in this bear market. It's an excellent book as well, by the way. If you are serious about growing your wealth quickly, TAO of Trading teaches time-tested strategies that will help to greatly accelerate your wealth creation. So Simon, over 30 years of experience as a trader and investor, Citibank banker, advisor, senior positions at Goldman Sachs, options trader, and this is amazing, Jeet Kune Do instructor, Reiki master, and teacher. Is there anything you don't do, Simon?
Thanks for the introduction, Rosanna. That's lovely, very flattering, very kind of you.
Please tell us about yourself, and you have such a vast, diverse, and impressive background. Just maybe did I miss something?
Well, no, I think you've done a great job. So yeah, I mean, I've spent the better part of my corporate career working for major global investment banks. And, I just got to a stage, I guess, in midlife where I started to question what I was doing and what was my marginal contribution to society. And I didn't really like the answers I was getting because really what I was doing was helping people who were already insanely wealthy by most people's standards kind of stay that way or become even wealthier. And I thought, I've developed a really good skill set here. It's time to put the skill set to use for people who could really benefit from it rather than people who, frankly, let's face it, don't really need it. And so that was why I wrote the book. Part of the reason I wrote the book, and that was why I've started up an online education company teaching people how to trade.
Wow, wonderful! I love that. Now, how did you get involved with the Jeet Kune Do and being an instructor? Was that later on in life, or was it earlier on?
Martial arts have been a part of my life for most of my life. I mean, I started with judo when I was 10. And, I studied traditional karate, I've studied Muay Thai, I've studied boxing. And then Jeet Kune Do was something that I was always curious about. I mean, as a teenager and a young man, I loved Bruce Lee movies. And there was always that little seed in the back of my mind of, if I got the chance to study Jeet Kune Do one day, I'd love to do it. And I moved to Singapore in 2010. And that year, I found a Jeet Kune Do instructor here, and I found the martial art for me. I mean, I love all martial arts. I really don't get into these my martial art is better than your martial art type discussions.
Yeah.
But Jeet Kune Do was one that resonated with me for a number of reasons, and I stuck with it and got my instructor certificate in 2019.
Beautiful, so nice. I took Kung Fu as a child. So
awesome.
it was great. I went up to green with the brown stripe. But yeah, it's very great. It's very helpful and in life, and it gives you great mental discipline. So that was very beneficial. And then Reiki. How did you get into Reiki?
Yeah, that one's probably a little bit more unusual. I got into pranic healing again. It was probably about the same time I got into Jeet Kune Do, actually. And, I don't know, it was just more out of curiosity than anything else. I'd always sort of been interested in esoteric stuff like that, found it very interesting. I found pranic healing just a little bit, to be honest with you, complex and cumbersome. And somebody suggested to me Reiki, and I studied Reiki through the Ashanti Institute, and just found that a kind of a simpler, cleaner way of achieving similar results. And I'll be honest with you, even though I got right into it for a few years, I actually don't practice anymore. But I think what it did was it helped me approach markets with a very different mindset.
Nice. That's it. And that, because I love your mindset and market psychology that you utilize. It's like a holistic approach to trading. So definitely the energy work, it adds that other important element for success. Could you explain the methodology behind that and the winning trader's mindset that you speak about?
Wow, there's a lot to unpack in this topic, but
Okay,
I think
let's just highlight it.
Well, coming from I guess that the change that sort of the energy work had on me was just how I view the market. Now, the kind of the traditional way people seem to want to view markets is it's a zero sum game. If you're winning, somebody else has to be losing. You eat what you kill. You've got to get in there. The people they try to make out like it's Thunderdome, and you're going into battle every day, and you're trying to basically kill the enemy. And weight eating can be a very testosterone environment sometimes.
Yes.
But I take a different view. That you look at how many trillions of dollars change hands across markets and across asset classes globally every single day, and to come up with the idea that money is scarce, it's kind of ridiculous. Money is bloody everywhere, and there's trillions of it changing hands every day. So instead of viewing markets as this dog-eat-dog world, zero-sum game where somebody's got to lose in order for you to win, just view them as this massive ocean of abundance, because that's really what they are. And all I'm trying to do every day is just dip my hand in that ocean and take out a little tiny piece for myself that nobody will even notice. I mean, I'll notice. It makes a big difference to me, but it doesn't make a big difference to the markets as a whole.
I love that. Coming from a position of abundance. It's not you take that and the other person loses. It's coming from an ocean of abundance. And it's almost like everyone can win at the same time.
Well, I mean, that's probably not true either. But I think that going down the rabbit hole of somebody else has got to lose in order for me to win, it's not healthy, and it's not helpful, and it's not necessarily true. I mean, I trade options almost exclusively, and 99% of the time I'm going to be facing a market maker. And if I win on an options trade, it doesn't mean the market maker is lost, because his job is to hedge his exposure. He's probably won as well. So, I think that this idea that somebody's got to lose in order for you to win, it's for me, it wasn't helpful psychologically, and it's not even necessarily true.
Yes. That's a great way of looking at it. A lot of people think it's one loses and one wins. So this is just a different way of viewing it. That's really nice. I like that. In your experience, what do you think usually keeps people from winning when trading?
The desire to be right, not being able to admit when they're wrong. What people often approach trading with this idea of I'm going to search for the holy grail, which is a system that catches every winner and zero losers. And that system doesn't exist. Losing trades are just part of life in trading. And what I say to people is view your losing trades as an operating expense. That's all they are. You should put as much emotional attachment to a losing trade as you would to buying paper for your printer, in your office. It's an operational expense. Now, any good business wants to minimize its operational expenses. That's natural, but you can't eliminate them. And when they come around, you just have to accept them. And that's how I encourage people to think about trading losses. It doesn't mean you're wrong. It doesn't necessarily mean you made a mistake, although you might have. It certainly doesn't mean you're stupid. All right, because all we're doing with
Yes.
trading is playing probabilities. Not certainties, probabilities. And if you've got a 65% probability of winning, you're going to lose 35% of the time. And you've got to be okay with that.
Yes. Do you have a stop loss? How do you know when something's a loser? Do you hold on to a certain point, or do you cut something at a certain point? Are there certain
Yeah, I
set?
do. I'm pretty fanatical about running stop losses. In fact, tightening up my stop losses is something I became really focused on 3 or 4 years ago, and it really did help. I mean, reducing your average losing trade or making your average losing trade smaller, it's much easier than trying to make your average winning trade bigger, and it's also much less risky. So that really is picking up the low-hanging fruit. I mean, you might get stopped out of a trade that then reverses and goes in your direction, but you can always get back in. And let's face it, trading costs these days are zero or close enough
Yes.
to it. So the only thing that would stop somebody from doing that would be ego. And ego is really what kind of gets in the way of, I think, people making it as traders. This desire to be right, and this idea that, the market's wrong, God damn it, I'm right, and I'll be proven right, eventually.
Yes.
And meanwhile, the market's moving against you, moving against you, moving against you, and you only need to do that a small number of times before your account's blown.
True. It's that ego. It's that emotion of just wanting to be right. Do you have any tips for people on how we can avoid or minimize emotional trading? Any techniques you use?
Yeah, I think the biggest thing is reduce position size. If you're feeling any surges of emotion, good or bad, you're probably trading too big. So just keep cutting your position size until those surges of emotion become very minor blips. I always say you shouldn't feel anything stronger than mild appreciation or mild disappointment. If you're high-fiving yourself over what a wonderful trader you are, an accident is about to happen.
Yes.
And if you're kind of disgusted at yourself about how big your losses have been, that's an extremely negative psychological downward spiral to try and trade out of.
Yes. Do you have certain numbers of stop losses for shares or for options? Are they different? Do you have certain numbers you hold?
Yeah, I mean, I don't trade shares anymore. I really only trade options. I have what I call my OMG level, which is a 50% loss. So if the premium I paid reduces by 50%, I get out, no questions asked. But I'm vigilant about getting out of positions before that happens. That is my oh my God level. That's when a
Okay.
trade has really gone wrong. And what I've really tried to do is get my average loser down to 20 or 30%, rather than waiting for my stop to be hit. A lot of people approach trading with this idea of that it's entry, stop, profit, target, done. I just set those three and go away to the beach. No. You've got to be vigilant about your trades. And if you can exit a position that isn't working before your stop loss is hit, it will make a big difference to your NLV by the end of the year. If you can reduce your average losing trade to only 25% instead of 50%, that's a massive improvement to your NLV, and you haven't had to do anything to your winners.
Yes, I love that. Do you have, with your winners, do you base it on a certain profit level that you look for, or is it based on the holding, the particular stock?
So it depends on the nature of the trade. If I'm trading a spread, so like a debit spread or a credit spread, my profit target will always be a percentage of the spread. So my rule of thumb, if I'm trading a debit spread, is I want to enter that spread for less than 50% of the width of the spread. So if I'm buying a spread that's $5 wide, ideally I want to pay about $2 for it, and not much more than that. What I will then do is I'll exit the spread at 80% of the width of the spread. I don't hold on to get the full $5 because that can take a long time. What I'd rather do is take the low-hanging fruit, grab the profit at $4 on a $5 wide spread, and then recycle that capital into a new trade that's far more profitable than sitting there hanging on for every last cent, which can take a long time. All right, because you've got to wait for the theta to decay. And it's similar if I'm selling a credit spread. Again, if I sell a spread for $2, I'm not going to wait for the spread to decay down to zero. If it decays down to 50 cents, I'll just buy it back, pocket the $1.50, and then go and do another one, and again recycle the capital.
Yes, I've been doing that as well.
Awesome. If I'm trading just a naked option, that's where it really comes down to technicals and what's happening in the market. I mean, I'll have expectations about a trade, and I'll look at things like support and resistance levels and Fibonacci expansion levels and those types of things. But if something's happening, if there's an obvious momentum shift, I'll just come out.
Love it. Now, I'm also an options trader. Not to I have so much to learn. We all have so much to learn from you. This is wonderful. I love that approach. I do that with my naked puts. I sell a lot of premium. I sell short puts, and so I tend to buy them back when they're not worth. I mean, it'd be nice when they go worthless, but I definitely buy them back when I have a decent amount of profit, and then I just keep rolling them into another one as the decay works in my favor. So my question for you is, what are your most used or favorite type of option trades or strategies that you like to use?
I mean, my go-to strategy is a debit spread because they're cheaper to execute. You can generally structure them so that they're theta neutral. Sometimes they can even be theta positive slightly. Setting profit targets becomes very straightforward, and profit targets tend to get hit quite quickly. So if I had to pick one favorite, it would be the theta neutral debit spread. I like butterflies. If I'm sort of going for more of a lotto ticket type target, I like high risk reward. High reward to risk butterflies. You can structure a butterfly quite cheaply with a 4-to-1, 5-to-1, 7-to-1, 10-to-1 kind of payoff, and they can work really well if you've got a move that you're expecting to happen within a specified time period.
Are you a fan of?
Good fun.
Yeah, are you a fan of diagonals or calendars?
I do. Yeah, I trade diagonals usually for an earnings trade. That's where I'll buy a call option that expire after earnings, and then sell a call option that expires before earnings, and that way you take advantage of the IV rush that you get on the long call, but the sold call still decays as per normal. I seldom trade calendars. I just find there's not enough juice in them.
Exactly.
For me,
I don't either. Same. Yeah. I'm a diagonal person. If I do the spreads, I like diagonals. I like to sell a further out strike, like within the next 3 to 5 weeks. I'll do an October sell, and then I'll buy a January 23. I always go January 23. I always go further out. So I hope to hold on to them. And then ideally, what's happened is I've been able to sell a few calls out of the money to make my cost basis zero. So I basically reduce that, and then I'm able to make money off of that long call.
No, that's fantastic.
Yeah, it works. It's not often, of course, but sometimes you hit that sweet spot, and it's call it the fig leaf. They call it the fig leaf or something. I don't know, but now so many different names for options. But yes, ultimately they're called spreads. So awesome. Have you been selling puts, naked puts in this market for premium
No. I don't sell naked options ever at all. I only ever sell a credit spread.
Really?
Yeah.
Let's say you want to buy, let's say, I'm just going to name a company. Let's say CrowdStrike. I don't know, that one always comes to mind first. Let's say you're interested in purchasing it for the long term. Do you go long term on shares, or you just stay with options?
No, I don't have a long-term share portfolio. I just trade options.
Oh, wow. I love it. Okay. That's even more exciting. Okay. So you don't sell puts for premium. Do you ever do a bull put spread?
Yes. Yeah, absolutely.
Okay.
I call it a put credit spread, but yeah, a bull put spread, definitely.
Yes. Okay, great. And so you don't have shares, so then you means you don't do covered calls on
I don't do
shares,
cover.
but you would.
No, but I'll sell a call credit spread or a call bear spread.
Yes.
Yeah.
Okay. Very nice. I love it. So in this market, in this bear market, what have you been up to?
I'm a trend follower by heart. All right. That's sort of how I grew up with my whole investing approach or trading approach. But in 2022, I have been doing more counter trend trading.
Mm-hmm.
And the turns have been fairly quick and fairly significant. So I've been focusing a little bit more on that, and focusing a little bit more on less directional trades. So
Mm-hmm.
selling more credit spreads.
Mm. And what time frame do you like your options to be?
Yeah, so it really depends. If I'm buying a naked option, I'm usually looking anything from 45 to 90 days out, with a delta of somewhere between 60 and 70 in order to minimize theta decay. But if I'm structuring a debit spread or a butterfly that's theta neutral or theta positive, I'm happy to go fairly short, 2 to 3 weeks.
Yes, with butterflies, I'm same. So you have you bought long calls in this market, bear market? Do you play that quickly? Do you play the long side, like in a bear market rally, and buy the long calls, and then
Yeah.
play like the downside and buy long puts?
Yep, absolutely. Yeah, I
Very
had
nice.
well. I mean, I've been doing it more by spreads recently. So I was short the triple Qs
Yes.
through a put debit spread, and then I closed that out, and then 2 days later I went long XLK tech sector through a call debit spread, and then I came out of that. My $4 profit target on the $5 wide spread was hit, and fortuitously that was the day before the CPI print. So
Good for you. That was nice because
yeah,
that wasn't too great that day.
no,
And that's, yeah, wow. Well, lucky you. Sometimes timing works in our favor. It's very nice when that happens. So do
indeed.
you hold, yeah, so you switch back and forth? Like, may I ask right now, are you positioned on the upside or more on the downside overall?
Very light positioning right now. I mean, we've got quad witching today or tomorrow, your time.
Yes.
And of course, we've got next week the most anticipated FOMC meeting since the last FOMC meeting. So not an environment where I want to have a lot of risk on. I mean, I've sold a couple of call credit spreads. I've got one put credit spread on, but really, I am about 94% cash at the moment.
Wow. Okay. Well, you mentioned the Fed, so I think we're going to delve into that. What are your thoughts on inflation and its stickiness? And do you anticipate a prolonged inflationary period?
Yeah, well, what I anticipate is a prolonged period of economic volatility. Inflation is going to wax and wane. It'll rise and fall. I mean, if you look at a chart of CPI in the 70s, there were 3 or 4 major peaks during that period. But inflation was kind of always there. And if you look at what happened to the stock market between 1969 and 1979, it went absolutely nowhere. And I think we could be looking at a similar period over the next, well, let's call it the next 5 years. 10 years is probably a bit too far. But yeah, I think inflation it's not going to just go away. I know people on Twitter have been calling peak inflation for over a year. It still
Yeah.
hasn't happened. And I think, look, even if inflation peaks, all right, it may not actually mean that much. we've got to get inflation under 5% for it to really mean anything. Moderation from 8.5 to 8.1. Who really cares? Who really cares if it drops down to 7? It's still a major problem. I think until inflation gets back under 5, it's still a major problem. And I don't think that's going to happen until the Fed funds rate is sort of north of 4. And the economy isn't going to like that very much. And neither is the stock market.
No, not at all. Do you think the Fed is going to be effective in being able to control this inflation near term with these hikes that they're doing?
Well, I mean, the early evidence isn't that encouraging. All right, the headline number did come down a little bit this week, but the month-on-month figure is re-accelerating. You think back to the July number, the month-on-month inflation number was actually down a smidgen, right? But this time it's actually started moving up again. So it kind of really calls into question the whole idea of whether inflation has peaked. And I guess what really kind of upset the market on Tuesday was the fact that core inflation is accelerating, which is a sign that inflation really is sticky.
Agreed. I'm looking at it right here, up 0.6% for the core. Yeah. And we have shelter there, and shelter, and I just recently learned, I thought it was quarterly, the OER, but it's actually biannual. So that reports twice a year, and it's so we already know real estate's a slow process and there's data lag. So with that reporting biannually, and housing prices really haven't come down that much, and not in my area, New York, our house value is actually still appreciating. We're looking at least another 12 to 18 months on the shelter. And then the rents are still rising here in the States. Most major cities, Manhattan is so expensive. So to me, shelter, I don't see coming down anytime soon at all. And then
that's
the
services. Inflation.
Yes, exactly. And the services have just gone up. And once services go up, I think that's much more difficult to come down than goods. The services are very sticky. And we have food inflation. I know that's part of the broad base, but there's drought, shortages, the geopolitical issues. So yes, to me, that whole peak inflation thing is, we try to be hopeful, but realistically, it seems that we're going to be elevated for quite some time.
And I think as a Fed governor, or as a Fed board, your legacy is going to be measured not by whether or not you presided over a recession, but whether or not you couldn't control inflation. And I think the Fed have been very clear that they're going to try and demand destruct their way out of it, which means much higher unemployment.
Yes, and I was going to ask you that. That's coming up, another question I have for you. But yeah, they always talk about avoiding entrenchment. And I do think that's very important. We don't want to accept high inflation as the norm, because then it starts affecting wage and price settings as well as household and financial decisions. So it's definitely a big concern that needs to be, you need to keep at it, as Powell says, until it's done. So it may be more painful now, and it most likely will with the higher rate hikes, but it will prevent it later on. What do you think about Q3 and Q4 earnings, or even into 2023?
You look at second quarter earnings, and they grew, but if you strip out earnings from the energy sector, they actually shrank. So I think the earnings story isn't going to be particularly cheerful either, and it does appear, as you alluded to earlier, that we're already in a wage price spiral. So I think margins are still due for significant compression. Yeah, I don't think earnings are going to save the market. Certainly not in the next couple of quarters.
Absolutely. I've been saying margin compression for a long time. Being a CFO of my company, I've been seeing this since Q1. We've seen a significant increase in operating expenses and cost of goods sold by about 25 to 30%, while our revenues have only increased about 5%, mostly due to price increases. So there's a dilution of value. There's just a compression of margins. And our prices, the cost of goods sold, have not come down. And actually, last week I received a letter saying they're going to go up another 10% from one of my major vendors. So yes, I think that the margin compression plus rising rates will diminish future valuations and also slow growth. So we have a lot of challenges ahead. Do you have any idea, and just in your mind, because you've been so experienced and you've lived through some of these and you've studied history, if you had to say when a possible recovery could begin, are you thinking mid 23 or end of 23 or maybe 24? Have you thought about that? You think 5 years out?
I avoid trying to make long-term forecasts or predictions. It's not really my game or my expertise. I really just try and trade the chart in front of me. But to answer your question, I think it's a very difficult question to answer, first of all, because this is a really wacky cycle. All right, we've had 2 consecutive quarters of negative growth, which has been the accepted rule of thumb to define recession since 1974, and yet we're at full employment. The market is, and the economy is seemingly full of contradictions at the moment.
Yes.
It's a pretty wacky cycle. It's really screwing with people's heads, and what the sort of recovery could look like, I really don't know.
I appreciate your honesty.
The thing that sort of worries me at the back of my mind is just the amount of debt that the global economy is saddled with at the moment, and really ill-equipped to deal with much higher rates.
Yes. So then you do feel we are in a recession, correct?
Well, I try not to get caught up in official definitions, and I try to just focus on what's going on. But yeah, I think, regardless of whether third quarter GDP is positive or not, I think there's a very strong chance we're entering an earnings recession. And I think there will be more quarters of negative growth in the future, whether it's third quarter or not.
Yes, absolutely. And have you thought about stagflation potential in the near future?
Well, that's where we are. I mean,
Yes.
we're there right now, if you ask me.
I think
And
we're in
it's
this,
not going to be easy to fix.
Yes, stagflationary nominal growth seems to be right where we're at, in my opinion. Yes, and it seems that unemployment will most likely be an issue in the US at some point near term. If we see quarter 3, quarter 4 earnings come down as lower output and volume presents itself, there'll be less need for workers. So they would probably need to cut back on the workers. So I think unemployment may definitely be creeping up into the end of the year.
And a lot of people are referring to the prospect of recession and rising unemployment as a Fed policy error. And I disagree with that. I think it's a policy objective at this point. That's what the Fed wants, because it's the only tool they've got to try and rein inflation in at this point, is to reduce aggregate demand.
Yes, exactly. As they reduce aggregate demand, real demand, then there'll be less workers, and then that will help increase their unemployment. And yeah, I guess that's the key, is just they want to reduce demand. And so, we'll see. I don't know how long of a process this will be. I mean, we're all hopeful. We were all hopeful. I mean, everyone's hopeful that the bear market is going to end sometime soon. Then there's people that talk about 2 bear markets back to back. How do you feel about any of that? I know you don't want to label markets, but you think it's...
Well, I don't accept that rally from June to August was a bull market. All right, that was a bear market rally. I know.
Yes.
We had Jim Cramer and Tom Lee and all the usual suspects were saying, "Oh, it's a new bull market," but I don't subscribe to that view. I think we're in a bear market, and we never left one. It was just a bull market rally. I mean, you've got to remember, during the tech wreck in 2000 to 2002. The NASDAQ saw 7 rallies of between 24% and 59%. Okay, the last bear market rally that the NASDAQ had, it rallied 59% and then still went on to make new lows before the bear market finished.
Yes. So it looks like we still have a ways to go. And it's actually quite usual that we do. So even though
it's normal.
and it seems that these bear market rallies are based on hope and sometimes just irrational, just human emotion. And that's why they're so violent and they can feel so real. And I always say they can convince the biggest bear to turn into a bull. And then once they do, they pull the rug out. So that's why, that's what you said, reduce your position sizes and just, utilize risk management.
And do put a few counter trend trades on, because this is the environment for that sort of thing. This is not a buy every dip sort of an environment, but it's also not a sell every rip kind of environment, because if you're trying to do that, a 20% rally like we had in June to August is going to blow you apart as well.
Exactly. Do you trade the indices like SPY, SPY, or SPX, or QQQ,
I do.
IWM?
I do. I trade all of them. Yeah.
And that's where you short. I guess you buy the ETFs and you short, and you do options. You do long calls on the inverses or long puts on the straight ETFs.
Yeah, I never
spreads.
trade inverse ETFs. I'll just buy puts on the
So you
normal
buy puts.
one.
Okay.
Yeah.
Then no SQQQ for you then.
No, I don't trade them at all.
Is there a reason why, or are you just not?
Well, I just don't. I don't trust them. I think if something really did start to break in the market, you remember the Volmageddon experience in 2019. I worry that something like that could happen.
Well, it's better to be safe than sorry. So it makes a lot of sense. I'll think twice before I go to SQQ next time. SQQQ. So Simon, what is the bond market telling us?
Well, I mean, the bond market has been, we've seen continued weakness in the bond market, right? In fact, I think it's had its worst year ever, or certainly the traditional 60-40 portfolio has. The bond market is saying rates are still too low. Money's still too cheap compared to where it needs to be, given where inflation is. And this is another part of this cycle that has really screwed with people's heads. People are just so accustomed to this idea that, if we enter a recession, we buy bonds and bonds will protect my portfolio. And that works in a deflationary recession, all right? And every recession we've had since the early 80s has been a deflationary recession. This is the first inflationary recession we've had since the 70s. And everybody's forgotten what happens in an inflationary recession. Bonds don't protect you. So, I mean, I think yields in bonds will continue to trend higher, not in a straight line, but I think 10-year yields, they're probably more likely to be 4.5% than 2.5% in the next year.
Wow. And then to me, I think of the equity risk premium, and that would mean that SPX yields have to be higher to maintain that spread. And then the valuations and price need to come down. Do you agree with that?
100%.
Yeah, so that doesn't bode too well for the equities market. Wow. Yeah, I guess, and then they always say the bond market does not lie. So it tells us a lot about where equities may be headed. And wow, 10-year yields at 4.5. That's pretty high. I always think that if you can get a good return on your money with no risk, the risk-free rate, then you're going to have to get a good price and a good value, and you have to get paid to take on some significant risks. So we're going to need to have lower valuations and price. I always try to explain it that way for people, because some people get confused with the inverse relationship, how the bond prices work with the yields. But it's definitely a concern. Do you play the bond market?
Look, I'll buy options on bond ETFs now and then. I don't trade bond futures or anything like that.
Okay. Are you a futures trader as well?
Not really. A little bit. My first job out of uni, I worked as a futures trader. But I've just found that focusing on one asset class has been really useful for me. It's really paid dividends. Just really narrowing my expertise on that one asset class, which is equity options. I found that a useful thing to do.
Great. Got to do what works for you and what you enjoy. Are there particular sectors that you prefer trading, or type of equities that you prefer?
I mean, the tech sector has always been great because it's big, it's liquid, there's lots of names, and it's volatile, and so it's been great to trade, on the way up and on the way down. And it's just too big to ignore. The energy sector's been fun this year. It's obviously been the one sector that's kind of given the bulls a little bit of joy. I guess the sectors I tend to avoid would be utilities and real estate, just because they tend to be low beta sectors. They're not as volatile. You don't get as much movement in them. But outside of utilities and real estate, I'll trade pretty much anything. Yeah.
Do you go into renewables, or do you like any of those in that space, or biotech?
Okay, biotech. For some reason, I'm a really poor biotech trader. I seem to lose money more often than I make money in that space. So if I see a setup in a biotech stock, it has got to tick every single box for me.
That's so funny. I have the same. It's like certain things just don't work. I don't know why, but yeah.
Yeah. If you hear me saying I'm going to buy biotech stock XYZ, you probably want to rush out and short it. For some reason, it's it just doesn't work for me. Renewable space has been quite fun. Had some good trades in First Solar and Enphase Energy.
I love my Enphase. That's a great company. And Array had a short report on it today, and that looks like a potentially good entry. I haven't read the report though, but I should probably. But most of those present opportunities. Enphase, and it's a couple years back, had so many short reports, and those were always good opportunities. But there's quite a few. ENVX. There's some very interesting ones in that space. I think with it being we're in an energy crisis and everything that's going on in the world, people are looking for alternative sources of energy. Speaking of energy, what are your thoughts on what's going on with energy and everything? Do you have any thoughts on that? Do you think about it at all?
Oh yeah, I mean, I think about it every day. It's kind of hard to avoid. I think people are looking at what's happening in Europe and assuming it's confined to Europe. The thing is, LNG, it's a global market, and if Europeans are prepared to pay multiples of what Americans and Asians are prepared to pay, the gas will eventually find its way there. So, I think power prices, electricity prices are going to contribute to sticky inflation as well, because obviously they weave their way into manufacturing costs, and it's just it's another problem.
Yes, I agree. It's definitely a global issue.
I don't know that people are, millions are going to freeze to death or anything like that. I don't think it's that dramatic, but in terms of an input cost, rising power is just another problem for inflation, or trying to solve inflation.
Exactly. I agree. There are a lot of issues. That's why it's very difficult. And I loved your answer, how it's difficult to predict the future. Things change every day. It's like there's always something new. There's so many moving parts that we really can't see or even imagine past 3-6 months from now. I mean, who knows what next year brings? Hopefully things will improve.
Well, this is why I say to people, when you're trading, when you're analyzing your trades, try and forget everything you think you know about what's going on and trade the chart in front of you, because that's where your edge is. If you're a technical trader. Yeah.
Are you technically based at all? Do you utilize charts with everything?
Yeah, I'm 100% technical. Yeah.
Wow. Any particular indicators that you prefer to use, on any of your favorites you could share?
Look, nothing that would really surprise anybody. I do use moving averages, as trend identifiers, and there is a support and resistance. I use things like ADX and DMI to assess strength and momentum. I'll use things like counter channels and Bollinger Bands just to put price in context. They'd be some of the main ones.
Okay, great. Sounds very similar to my charts then, and pivot points and stuff like that. On Amazon, your fantastic book had some notable reviewers. Harry S. Dent Jr. I read his books in the 90s and 2000s, but he states, yeah, he did, right? He was very good. He's very bearish. Like, I think he lives in Puerto Rico or something, and he's like, I don't know.
That's right.
Yeah. And so we really found a lot of this stuff very interesting. But he says, and in the TAO of Trading, Simon Ree teaches the reader how to profitably navigate the stock market. And I think that's like on point, because I read your book a while ago and then I just recently reread it. And I have to say, it's a superb non-traditional trading book. And it emphasizes to me, yeah, you're welcome, the most important parts of trading: psychology and mindset. And an empowerment mindset is, it's just, you empower. I felt just so empowered. It felt like a holistic, I could just feel that you expose so much and you talked about, I could just feel the energy, like maybe just the Reiki energy coming through. But it's just a fantastic book and I recommend it for everyone. And it guides you on maximizing your profits while minimizing your risk. I mean, as a trader, as an options trader, to me, that's number one. I mean, that's why we're here. We want to maximize our profits and minimize our risk. And it's a beautiful blend of Western and Eastern philosophies. And like you said before, how, you utilized, you had a point in your life where you questioned things, and this book came out of that, and you wanted to teach people the way. And that's what the TAO means, is the way. And, so on Twitter, I ran a survey this past week on which chapter everyone wanted you to speak about the most. And of course, we know the result. I already guessed it. It's why trading is like sex. So the big question is, Simon, why is trading like sex?
Okay. It's the best analogy I can give you is if you're going into either of these undertakings with a specific objective in mind, it's unlikely to be pleasurable for you. What do I mean by that? Just get involved. Get into whatever it is you're doing and enjoy it. And don't try not to worry about what the ultimate outcome is. And the less you worry about what the ultimate outcome is, the more likely that outcome will be pleasant.
I love it. That's so right. It's so deep.
They say, the more you try to focus on orgasms, the more they seem to go away. The more you try to focus on trading profits, the more they seem to go away.
Yes. I always say focus on the process, not the result.
Yeah, it's just it's another way of saying that effectively.
But you made it a catchier way. But you made it a very catchy way that it gets everyone all excited and interested. And then I love the reference you say to naked puts and straddles and strangles.
Yeah.
That's very nice.
Can start to sound a bit wrong, can't it? Yeah.
I know, right? Oh, speaking of those, do you do iron condors?
Yeah, I do, but honestly, not that often. I usually find predicting, getting the movement right on one side hard enough.
Yes, that's true.
Iron condors can be great in a high vol environment, sort of after a stock has had a big move and it's kind of due to go for a quiet period. Where what traps people often is they'll look to do an iron condor on a stock that's in a very clear consolidation pattern, but quite often what's happening is during that consolidation the stock is building up energy for a big move, and then they'll do the iron condor and one side of it will get absolutely blown apart. I find it's better to sell iron condors on stocks that have already had the big move and are then due to kind of reconsolidate.
I love that thinking. That's right. Absolutely. Because I've had one side blow off on me before. But yes, that makes perfect sense. Thank you for that. What are peanut butter options?
Spreads.
What is the meaning of that?
Spreads. So yeah,
Well,
it's
why
just
peanut butter?
well, because it's peanut butter's a spread, right? You spread it on your bread.
I guess so. Yeah, that's true.
Yeah.
Okay, so I like that. See, you are so smart. I love that. Yeah, okay, so I didn't even think of that one. But okay, so peanut butter spread, so it's spread options. Okay, so that means all kinds of vertical, diagonal, and everything. Okay.
Yeah, anything. I mean, well, in my book, I focus on debit spreads because I think debit spreads are the most kind of beginner friendly. And if you're trading a small account, debit spreads are a godsend because you can trade any stock, regardless of its share price, and it's much easier to manage your risk. So I'm a big fan of new traders or beginners learning how to do debit spreads. I think they're great. And that's what I mean by adding some peanut butter to your options trading.
I love it. That's
Adding a
very
spread.
creative. Adding a spread. Okay, got it now. Can you briefly discuss the 5 myths of Wall Street without spoiling the book?
Yeah, okay. So just Wall Street has concocted and perpetuated a bunch of myths that are really designed to reduce your expectations so that their very average results seem quite good, to reduce your, I guess, confidence in your ability to do this yourself, to make finance and investing seem way more complex and difficult than it really is, and to essentially justify their existence and the fees that they charge you.
Wow.
And so what I try to do is break them down just to make people realize what's going on, why it's not true, and how you can benefit massively by doing it yourself.
I love that. And with that, you have a TAO of Trading Options Academy. I have to tell you, I didn't know that until this past week. And your academy, when did you begin that?
So the Options Academy began in 2020. So
Wow.
it was awesome timing.
Perfect. Yeah, because there was a rise in options traders. I mean, a huge increase. I forgot the number, but it was like, I don't know, 60%, some high number of new options traders from that bull market that we had in 2020, from the mass infusion of liquidity from all the stimulus and the rate cuts. So your academy teaches how to grow your wealth quickly, generate income with high probability trading opportunities in just 20 minutes a day while removing the stress out of trading. That just sounds amazing. And it's the way, as your book states, the TAO. Could you tell us about your academy? What kind of plans you offer? Like how do you do that? Like everything's through Zoom, or how do you?
Yeah, well, it's all online and on demand. So there are 7 modules in there. The first module is just really a primer on technical analysis, looking at the charts and the indicators that I use just to make sure that we're all on the same page. And then modules 2, 3, and 4 are 3 different trend following setups that I use. Module 5 is devoted to risk management. Module 6 is devoted to developing the winning trader's psychology and mindset. And then a new module I've added, module 7, deals with counter trend trading. So how to take those trades, or how to identify turning points, picking tops and bottoms effectively. And then for members who are in the Options Academy Elevate program, they get 12 monthly coaching calls done via a webinar. So that the group of us, we get together every month, talk about markets, talk about trading techniques, talk about what I'm looking at, trades that I'm considering, that sort of thing, and just go through reiteration of some of the basics that are really, really important.
I love that. So you teach the process. do you share particular stocks that you're trading or that you're looking at, or is it like that as well?
Well, so I've got a monthly subscription program called Options Academy Accelerate, and that's for people who really want to accelerate their trading progress. And in that program, they get a video from me every day on the market, what I'm seeing, what's happening, looking at the macro situation, cross-asset situation, different sectors, and that's where I break down all of the trades that I'm taking and why, and how I'm managing those trades too. So if I'm coming out of a loser, where and how and when and why I'm coming out of it. If I'm taking profit, again, the when, why, how, I'm doing that. So people get to literally look over my shoulder at all of the options trades that I do.
Very nice. Do you have a certain amount of stocks that you trade at one time? Do you limit it by like 20 or 30 or 10?
Oh,
Or
10.
10
Yeah,
at one time?
usually, I mean, I may have more than 10 positions on, but I generally won't have more than 10 different symbols.
Got it. Yes. Okay. And the reason why I ask you all this is that everyone always asks me, do you know of any great options school or anything I could take? And I have to tell you, there are not many that I trust, or no offense to anyone out there, that I really value. And I think yours is the real deal, because you're a great guy, Simon. And from a long time ago, I remember I started following you and you followed me. And I love all your tweets. Your content is amazing. And your book is fantastic. And I'm sure this Options Academy is the best. So if anyone out there wants to check it out, go to taoftrading.com. And Simon did not ask me to mention any of this. I'm doing this all on my own, just so you know, because I think it's fantastic. And if you want to learn, you got to go to someone who has the experience and genuinely cares to help. And that makes a difference. It's not just about making money. And a lot of people, sometimes have that focus, and, it's about helping each other and guiding each other. And that's what we're here to do. We're here to enlighten and elevate each other. So, and that's the mindset that I adopt. And that's why I'm on Twitter. And Simon, you are wonderful on Twitter too. And I appreciate everything. We have a little bit of time, and if it's okay with Simon, if it's okay with you, if there's anyone who would like to ask a question, for Simon, please raise your hand or please make a request, and we'd love to have you ask a question. So going once, going twice. Anyone? Okay, I don't see anyone. Anyone want to ask a question? Okay. Simon, is there anything else that you would like to mention?
Love what you're doing as well, Rosanna, on Twitter. I think what you've said about how we can obtain more by helping each other and collaborating. That's certainly you live. You walk that talk. I can see you live that through your Twitter posts as well. You're doing a great job helping people. So yeah, let's keep it up. I really enjoy it. I can tell that you do as well.
Yes,
and,
I love it.
Really keen to help as many people as I can.
You're awesome. I thank you so much. I love what I do. I'm so passionate about this, and I could tell you are as well, and you're so knowledgeable, and I appreciate everything you say. And I just want to thank you so much for coming on this space, taking your time. Wait, did you have your espresso this morning?
I did.
Did you have breakfast this morning?
No.
This is one of your usual days of no breakfast then?
It's just a normal day, yeah.
A normal day. I like that fancy breakfast from the other day. That looks very tasty.
That was delicious, yeah.
But thank you so much for everything, for your time. And everyone, make sure you're following Simon Ree and check out his book, TAO of Trading, and his website, taoftrading.com. And thank you again. And I'll see you on Twitter. Thank you, everyone, for joining tonight or in the morning. And we'll be back soon next week. I think I'm going to have Larry from Blue Chip on Tuesday. We're interviewing great people, and Simon, you take the cake. I have to say, you're a great guy and I'm brilliant. So thank you so much for everything.
You're very kind. Thanks, Rosanna. It's been a real
pleasure. Have
pleasure.
a great night. Thank you.
Thanks, everyone.
Bye-bye.
Bye-bye.
Thank you for listening to the Rose Show podcast. please visit rosannaprestia.com for more episodes. See you soon.